What's up, everybody? Welcome back. Now we are going to be breaking into some charts, looking at how to capture market imbalances, how to spot supply and demand zones, how to draw them on multiple time frames, right? Because the main goal here to price and volume analysis, the main goal to trading, actually, all in all, is to make money, right? And become successful consistently. Now, the way to do that is by using price and volume analysis, by using technical analysis, by using any edge we got. So in the presentation we just went through, we broke down price and volume analysis, right? We broke down how to draw supply and demand zones, right? And now I'm going to show you how to do it on the Thinkorswim platform, right? Because this is our main platform that we use as traders, especially if you're part of the high performance trading community, right? So I want to show you the correct way, the way I do it day in and day out. I want to use some terminology, right, that you're going to hear on the Discord so that you know what we're talking about. And all in all, I want to show you the most simple way to make money on the market, right? So we're going to break right into it here. So on Apple, so first things first, our goal here is to capture market reversals, right? So first things first, you want to identify all supply and demand zones. Now, the first way to do that is you go to the largest time frame you got, right? Just to kind of get a general market context, right? Because the higher the time frame, the more powerful the zone, right? So here on Apple, we got kind of a balanced market here, going back to November 14th to November 25th, right? So what I'm gonna do is right click and go all the way over here to our rectangle, right? And then I wanna drag it out. I wanna capture all these bottom wicks here, right? The best that I can, and then boom. It's as simple as that, right? There is my zone, a daily demand zone, right? So, and one thing I really like to do is go to edit properties, jump up here to the color, and I like to pick dark green. Now, if you use light green, it kind of gets in the way of the candlesticks, and I like to keep my charts as clear and as simple as possible, so I go with the dark green. And now up here for supply, we're just going to do the exact same thing and try to capture as much as we can. So now that we've done that on the daily time frame, now we're going to break into the 4 hour, right? And on the 4 hour, you can see we are kind of in a balanced market, right? So what do I mean by a balanced market? So when I say balanced market, I know we covered a little of this in I think candlestick charts and chart patterns, but a balanced market is meaning you're in a range, right? So Apple here is trading in between 154 and 147, right? We had a little breakout here below, and technically, if you wanted to, you can cover all of that. So we're trading in a balanced market. So in a balanced market, you can expect the market to trade within the range, which is actually really good way to capture market imbalances, right? Because you know here, every time price, right, comes into this 147 area as demand, we are expecting buyers to show themselves, right? And if they don't, we tend to go short on the market. But sticking to just keeping it simple right here, every time price hits 147, we're looking for buyers to come in. And on the flip side of that coin, every time we see price enter this 153 or 152 to 153 area, we are looking for sellers, right? Simple as that. So now that you've done that, let's break it down to the 1 hour. So now this is what we're looking at. So as you can see, every time price came into here, buyers rejected it, right? Price comes into this area, buyers reject it, right? Buyers reject it. So that's why I use the term high probability market reversal, right? So one thing you're going to hear me say in the Discord a lot, right, is, hey, all right, so pre-market plan, we got Apple, we have a daily demand zone on Apple around 147. Looking for a demand rejection, right, is basically saying looking for a reversal in the demand zone, right? So, and then if I say, hey, we have a daily supply zone here at 152, that means I am looking for a supply rejection, right? So just like that, that's the terminology we use. That's what we look for pre-market and day in and day out. So now that we have identified our supply and demand zones, now we are looking to break into intraday trades. So now we're gonna break into the 15-minute. So this was Black Friday, right? And now this is actually a beautiful picture, right? So this is what I like to call simplicity. So how can I explain this to you as simple as possible? So basically, every time price hits this demand zone, we get a rejection, right? So we have a high probability of catching a demand zone rejection every time price comes into 147.5, right? So how did this day look like on Thursday? So pre-market, we had this sell-off, right? And I also had my eye on the QQQ and the SPY, but we're gonna break into that in another lesson called market context, right? So where you kind of align the market leading equities and other commodities, right, for trades, and try to align the stars. But for the sake of this example, we're just gonna stick to Apple. So we had this slight supply zone here at 148, 149 area, right? And how do I get that? So I basically look for consolidation, right? So this would be a little supply zone here, right? So anytime buyers tried to lift the price but couldn't, supply zone, right? So as price breaks into this demand zone, right, 147, I wait patiently. The most important part of trading supply and demand, ladies and gentlemen, is waiting patient, waiting for your edge to be present, right? And I could speak on this because for so long, right, probably a whole year of my life trading, I didn't have the patience. I was very good at mapping out supply and demand, but I was horrible at my entries. I always felt like I was kind of missing out, right? And I was rushing trades. I was entering trades way too soon, which hurt me, right? Which crushed me. So as I tell you, as I teach you supply and demand, I must remind you to be patient, because this market rewards patience, ladies and gentlemen. It does not reward the people that jump quick. It does not reward the people that act fast without a plan, right? It rewards the traders who are patient and wait for their edge to be present, right? And how you do that is by looking for a chart pattern and or reversal. So this is what Friday looked like on Black Friday, where there wasn't any volume at all, but price rips down into this demand zone, rejects, right, comes up, battles VWAP, right, breaks through VWAP, and flips right into our supply zone, right? So that is how you identify the zones, that is how you identify the chart pattern, and that is how you capture the market imbalance, right? And you could obviously see some volume peaked up right here, which is just extra confirmation, right, that buyers are coming in. So another way to use supply and demand, right? And this is in a perfect balanced market, wonderful opportunity, wonderful picture perfect, right? But my favorite way to use supply and demand, and I just want to show you this real quick, is pre-market data. Okay, so pre-market data is very powerful. And what I mean by pre-market data is pre-market lows and pre-market highs. So let's just pull up another example real quick. So here on the SPY, right, I just kind of want to focus on this day right here. So looking at this, we know, right, because price came down into this 393 area and rejected, right? That means buyers are present. That means buyers like this 393.71 area, right? So what we do is right click, grab our rectangle, and draw our demand zone, right? So then go into more, pick your dark green, perfect. Now, I like to kind of keep these as small as possible. That way you get better and tighter entries, right? So the market opened up here on SPY right here at 395, right? And there is a sell-off immediately. Now, what does this tell you? If market opens up in this area and sells off immediately, with end of day being this 395.90 area, right? And end of day is always a super important supplier demand zone, right? So what I mean by that, right? And let's just make this so super easy. So every day when I trade at the end of the trade, or whether in the beginning of the day during pre-market, I map out three things. I map out my supply and demand zones, and I also map out end of day, because whatever end of day was, there is going to be high volatility around that price. So just for the sake of this example, where end of day was $396, right, and 1 cent. So that is where price ended at the end of the day. So going forward, I know there's a demand zone here at 393, which means I'm looking, if price enters this 393 area, I am looking for a demand rejection. I am looking for buyers to come in and overcome the supply and take the price up to end of day, right? That is my target. That is my market imbalance. That is my trade. And the way I do that is by watching pre-market, right? So I know there's supply here because that's exactly where the day opened up. And I know demand's here from the day prior. So as the market opens up here, we get a rip. 1, 2, right? Right into this end of day supply area. And we get 3 rejections off the rip, which is a super bearish indicator to go short, right? Remember candlestick charts and chart patterns. We are looking for the candlesticks to tell us what's going on, right? And in this example, it is a perfect supply rejection, right? So these are 15-minute candles, which means you would have had 45 minutes to enter this trade short. 45 minutes of confirmations to take this trade all the way down to 393, because the market has to liquefy. It has to go from its supply to its demand, right? That's why we target the market imbalances, right? The full move. So as price rips right up into 396, rejects 3 times, it rips right down to our demand zone, right? And as you can see, in demand, it rips through, makes a new lower low, and buyers swoop in and take the price right back up to our supply zone. So that is how we capture our market imbalances, right? Perfect. They're like magnets, guys. They're extremely powerful. And I absolutely love supply and demand zones. They have changed my life. I remember as I first started out as a trader, how much I struggled, right? I used all these different indicators, all these different moving averages, right? Which I'm not saying you can't use them, but I promise you all you need is supply and demand zones, right? That's how I trade. That's how I've become consistent. And that's how I have become successful in the market, is by using supply and demand, right? Price and volume analysis. And how that works and how that looks is exactly like this, right? You are looking to capture moves in between important areas of volume, right? So looking and waiting for price to enter a supply or demand zone and take it to the long side, right? And guys, this is just stuff that you are going to use day in and day out, over and over and over, right? So look at this, right? And this is another one, right? The end of day strategy is so powerful here. So I just want to show you this one more time before we end here. So end of day, right? End of day. And I always make my end of days price levels a little strong, or a little bright, so I could see them. So once price gets around that area, right, and you could draw it as a rectangle too if you want, but it's so crazy because every time price touches end of day, you always see some sort of reversal or continuance, or buyers or sellers are battling, right? And so in this case, right, we got pre-market, right? And we got buyers in pre-market, and then we get a sell-off right under the whip, right? And then we touch end of day perfectly and reject. So that is telling you immediately to go long, right? Price comes down, touches end of day, starts to retrace, starts to go back up, and then look at the buying power you get all day. I mean, we get a $5 move here on the SPY like it's just nothing. Buyers are extremely strong. And these are important areas of interest. So going forward, trading supply and demand, always keep your eye on your zones. Always start out on the largest time frame, right? And that's my homework to you guys, is to go through these charts, right? Break down how to draw supply and demand zones, right? And let's just go over a couple more. So we got the 4 hour on SPY. We got a supply zone right up here, right? And look, this is just another perfect example, right? So let's just delete some of this stuff so that you can see. Okay, so price rips up here, right into 403.60. So what do? Right click, add drawing. That's my all-time high. Boom, perfect supply zone. And look, price comes down, bounces off demand, rips up into 403.60 and rejects perfectly. You know what I mean? It's crazy. Look, the high here is 403.54 and the high here is, what is that? 403.38. So what does that tell you, and how do I want you to look at this? That is a large passive seller sitting at 403.60, 403, let's just call it the 403 to 404 area. You have heavy seller there. So, and he only wants to sell his billion shares at 403.60, right? So every time price comes up into that level, it is like a wall. It cannot break through it, and it cannot supersede 403.60. So as we see 403.60 in pre-market, right? Let's go over the SPY. As we see that in pre-market, we know this is our supply zone. Look at perfect. Couldn't even get past it. So pre-market comes. We got a 399 supply from the day before, and the market, boom, sells off. So now what I'm doing is waiting patiently for price to enter 403 to 403.50 area, right? We got pre-market high at 403.39. So I know if price breaks above this, right, that is my stop, that is where I get out, and that's where the trade's finished. So let's break into the 1 minute. See exactly how this day went. So let me just break down what was going through my head here. So 401.52, we got a bounce off in pre-market at 401.52, which is a little demand zone, right? Now remember, it's not extremely powerful because it's on a low time frame, but it is a demand zone. Buyers did show up at this price, right, and take and move 401.52 all the way to 402. So there is buyers there. So as the day opens up, right, in pre-market, it's just like I told you, pre-market lows and pre-market highs are extremely important. And what do I mean by that? Is pre-market low equals the lowest price during pre-market. Pre-market high equals the highest price during pre-market. So going forward, pre-market low and pre-market high are always strong areas of value. We are looking for chart patterns in that area, and we are looking for volume. So my main trade this day, though, was if price could enter this pre-market high area, I would be taking the market short. So price rips up, bounce perfectly off this demand zone, and look, we get a spike of volume up here to 150,000 shares per minute. Versus 100,000 shares per minute. So there was an extra 50,000 shares traded at 9:35 when price ripped through. This would have been a wonderful indicator to take the market long, right? And we'll get into how to get in and out of trades, waiting for retests, stuff like that in another lesson. But as the price rips up, consolidates, right? I'm waiting for her to enter my supply zone, right? And then price just keeps going, and look at that. Look at that beautiful, look at this high volume candlestick rejection, right? Even though it wasn't a perfect rejection, that candlestick is a clear indicator that sellers are entering the market, right? Even though buyers came through, they could not make a higher high because we have a high over here at 402.91. Buyers, then it rips down, sellers came in immediately, and then buyers tried to take it, could not break 401 or 402, and sellers came in immediately. I entered this trade right here. Once it tried to do the retest, couldn't, and then took the market short for a sell-off for pretty much the rest of the day. And then we had price come down, rip, and was met with buyers here. Perfect demand rejection right here, and she comes right back down at the end of the day. So guys, going forward, right, my homework, my action items to you is to look on your charts for supply and demand. Break it down on the 4 hour, the 1 hour, always start on the daily to understand who is in control. Are you making a double top, right? Are you in supply? Are you in demand? And if you are, look for the rejection. The main edge, right, that makes this strategy so powerful is that the chart pattern within the zone, right, gives you a high probability for a market reversal. That is what you need to look for. That is what we need to see day in and day out to become successful traders in the market, right? So email me, contact me if you guys need any help. I'm here for you. Contact me on the Discord. Let's build this community and let's make high quality setups only.